Power, live from Washington, D.C.
The job numbers just came out, and they were fantastic, far better than even anticipated. They anticipated pretty good, but they had no idea it was going to be that. And unfortunately, we're in a world where for the last 15 years or so, when you have good numbers, the market goes down. When you have bad numbers, the market goes up because too much emphasis is placed on inflation. When you have good numbers, the market should go up, not down.
Breaking news, Friday's sell-off. The Nasdaq plunges as traders dump tech, and a surprise jobs report fuels speculation over a rate hike. We'll have more on President Trump's reaction as he pushes affordability tonight in a key swing state. Our guests, economist Heather Boushey and Neil Bradley from the U.S. Chamber of Commerce, are standing by live. From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew, alongside Kaylee Lyons.
And Joe, that is our top story tonight. The rout on Wall Street. The worst day for the S&P 500 since October, and the worst one for the Nasdaq 100 since April of 2025, with the AI trade unwinding and bond yields soaring as a solid jobs report fuels bets that the Fed's next rate move will be a hike. Here was Kevin Hassett, the director of the National Economic Council, responding to that data this morning on Bloomberg.
We're getting positive jobs numbers because we've got high wage growth, and native-born Americans are rushing into the labor market in droves. And so that negative story is gone. And finally, I got to say, we really love going through the Bloomberg data, and we have this thing that I like to look at, which is the probability distribution of all the forecasts for the jobs number before it comes out. And when I looked at it after I got these numbers, I saw that the very, very top person was low by about 40,000 jobs, which shows that the Trump economy is surprising Wall Street analysts over and over again, and they need to maybe think about getting the supply side of their model fixed.
And President Trump also reacted to the data and market reaction, saying on social media, quote, with a great jobs report like just announced, stocks should go up, not down. That's the way it was for 200 years. Growth does not mean inflation. How else can a country attain greatness? It's a message he reiterated to reporters on Air Force One earlier this afternoon. So for more on today's sell-off, let's turn now to Power Moves with Bloomberg's Norah Mulinda, who joins live from World Headquarters in New York. So, Norah, the president says stocks should have gone up today. They most certainly did not.
They did not at all, and today was just full of superlatives. The S&P 500 lower by 2.6% to end the day. This was the worst day since October that we saw for that index, but we really saw a rotation out of technology companies. So you saw that emphasis on the performance of the Nasdaq 100, which did see its worst day since last year, and more specifically, its biggest drop since Liberation Day on April 4th, 2025. The Dow Jones Industrial Average, which we know tends to have a lot of those blue chip names, retreating from a record high, so down about 1.4%. And small caps also, we did see investors selling off. The Russell 2000 down about 3.5%. That's its worst day in more than a year. And we saw all of this really playing out also in the bond market. If you take a look at treasuries, I'm looking at treasuries right now, falling across the curve. So we did see a lot of the emphasis on shorter dated bonds, really seeing the majority of that move, but yields really spiking. Taking a look right now at the 2-year policy sensitive 2-year treasury yield at 4.1%. And then also the U.S. 10-year treasury yield at 4.5%. So you're really seeing a lot of these yields spiking as people really price in what this means when we think about inflation. We got a massive jobs report today that did beat, or it really was a surprise in terms of what we got in terms of the data. So people are really thinking about the fact that the Federal Reserve may actually hike this year, which was sooner than anticipated. And we saw all of this really playing out in some of those more speculative sectors as well, like Bitcoin. We saw keeping an eye there as well. We did see Bitcoin earlier falling below that $60,000 level. So when you think about any sort of risk off mood in the market, you're certainly going to see that being exacerbated when you look at Bitcoin specifically. Also have my eye on gold, lower by about 3.3%, and silver as well, lower by 8%. So investors really trying to figure out where they want to be in the market, and at least on the equity side, you saw a lot of people going into some of those defensive sectors like healthcare, utilities, even real estate.
Quite an unwinding or a rotation, I guess, at best here, Norah. And Meta certainly didn't help. What a case of timing in this case with a report in the FT that the company is looking to raise tens of billions of dollars in a stock offering. This, of course, on the heels of Google's massive fundraise and in advance of the huge IPOs we have coming from the likes of SpaceX starting next week. Is there a worry about where all this money is going to come from?
Absolutely. That's what I've been hearing from my sources on Wall Street, especially as we flip ahead to the SpaceX IPO, which is just a week away. People are really thinking about where investors are going to be pulling this money from. So some saying on Wall Street that maybe we're seeing this rotation out of tech because people are actually trying to find some money to put into the SpaceX IPO. But especially as we think about Meta, Alphabet having that successful $85 billion sale. We know Meta is considering this equity raise just following that. So these companies are really trying to find money, especially as they continue to build out artificial intelligence, and you're certainly seeing traders following it.
Norah, thank you so much. Bloomberg's Norah Mulinda after a bruising week on Wall Street. Joining us now for more on today's jobs data and more is Heather Boushey, the former member of the White House Council of Economic Advisors in the Biden administration, professor of practice at Kleinman Center for Energy Policy at the University of Pennsylvania. Dr. Boushey, it's great to see you. Welcome back to Bloomberg TV and radio. It was quite the blowout today when it comes to payrolls. 172,000 is a monster number. Unemployment holds steady right where it was. Is Trumponomics working?
It's a great question. Listen, it is always good to see strong job growth for American workers and their families. So certainly this is good news for families all across the country that, we're seeing these gains in the labor market. And of course, we saw the upward revisions for the past couple of months. So that's a positive indication. But, here's the thing. When you look under the hood, there remain signs of weakness. So we are not, I would say, out of the woods yet. One of the things that is concerning is that wage growth is failing to keep pace with inflation. That has got to be concerning for families who are seeing higher prices and not seeing that pace keep up. And even though we did see broad job gains across the economy, there are some reasons to be concerned about whether or not that will last. We saw a lot of hiring in leisure and hospitality. Maybe that will continue, or maybe that's related to the World Cup hiring that's happening this summer. We did see this bump up in local government, and that is probably a one-off. So I think that, I'll still we still have concerns about whether or not Trumponomics is working, and I remain very concerned that low and moderate income families continue to struggle in this economy.
So does that mean it's not the right environment to hike rates into, Heather? Because the market is betting on that today.
Certainly. And the big bets, I think that's also connected to AI and whether or not we think we've overinvested there. So, there's a bunch of things going on. But certainly, I think today's report does give a lot more backing to the idea that rates are more likely to go up than down. We will wait to get new inflation data next week, but the most recent prints on inflation, it remains relatively high. And so when you see that 3.8%, your eyes pop a little, and that certainly remains concerning to the Federal Reserve.
Well, and while it may not be in the core, $4.22 at the moment nationally is something that we're all dealing with, and those numbers got a lot higher depending on the state that you're in. Heather, a lot of commentary on wages today. Average hourly earnings rose just a little less than 3.5% from a year earlier, the slowest pace since 2021, which is not always a very good comparison here. Describe to us the combined effect of rising prices and stagnant wages, what that could mean for the months ahead.
Well, that means that consumers are strapped. And we've known this for quite some time, that families have been strapped between all of the cutbacks that the Trump administration has made in services. So families' healthcare costs are going up, challenges with the cutbacks because of DOGE and all the things that have happened with government. On top of this, of course, Trump's war in Iran has raised gas prices nationwide, and that is a real challenge for families. And all of that is then squeezing out other kinds of spending. What we're seeing now is that families are dipping into their savings. Never a good thing, right? We need to make sure that people have enough to not only make ends meet week to week, month to month, but they're able to put a little bit aside. And so seeing those saving numbers dip, I think, is very concerning because it means that families are having to really stretch. So until we can get that inflation under control, till we can get particularly energy prices under control, families are really challenged.
Well, and as you talk about saving and keeping money aside, Heather, obviously you can save in cash, but you also can decide to invest. And I feel like a lot of the conversation around the K-shaped economy has been, yes, the lower half was struggling, and you were just speaking to that, but the upper half of the K is powered in part by wealth creation in financial markets. And I know one day does not a bear market make, but if we start to see a deterioration in some of the stock gains too, and the upper half of the K starts to feel that more, what would that mean for the economy overall?
Well, I think that would not be good. I mean, certainly, though, fundamentally, what you are elevating, Kaylee, is that a K-shaped economy is inherently unstable. This is not a stable path to growth. It cannot just be paper wealth, for those at the top that is driving the economy. You want to see those broad-based wage gains for families across the distribution that can support a thriving economy. And so we've got ourselves into this situation, and now with the market not looking good this Friday, of course, we'll see where it goes. Markets go up or down, but with the rich really driving consumption, I do think that is worrying. So, I think that I'll say it again, we aren't out of the woods yet in terms of watching to see whether or not this economy continues to move forward. And there's a lot, under the hood in today's data that is very disconcerting.
Well, it's interesting. The markets can also point to a lot of important trends. And while we saw huge losses today in the indexes, people are bemoaning losses in AI stocks and so forth, we actually saw gains in stocks like McDonald's, in Walmart, in TJX. I know you're not a stock analyst, Heather, but does the reality of the scenario support that trend? Well, you have families that are pinched. They don't have enough money for all the things that they need, and we have seen this decrease in family incomes. Well, that does mean that families are looking for value. They're going to be going out to lower-priced restaurants. Yep. They're going to be looking for those sales, and so that doesn't surprise me. And I'm actually really glad that you elevated it because, of course, when we're talking about the economy, we should be talking about the majority of people who work for a living and what kinds of jobs and what kinds of wages they get. And it's good to see that the markets were, thinking about that a little bit today as they were watching what was happening again with AI and investment and what that means for interest rates, but what that means for the consumption for the majority of Americans.
Well, and just finally, Heather, on artificial intelligence, I wonder which side of the fence you fall on, that this is a very disruptive technology that ultimately could lead to extinction of some American jobs, or a technology that is actually going to lead to greater job creation just in different areas of the economy.
Well, I think all of that, it depends on how all of this, continues to be rolled out. I mean, right now we're making real decisions in communities all across the country about how to spend resources, how to spend water and energy and locations for, data centers and AI processing. And communities are having to deal with the higher costs and the consequences of that. That is one important thing to think about. And then what does this do to jobs? Who owns the value that's being created from AI, and how is that being distributed across our economy? How is this being deployed in workplaces across the country? How are workers being involved? Those are the questions that we need to be asking about this technology, because if it can free people to have more leisure or to, have a better quality of life, that's, I think, what we should be aiming for. So it's not a yes or no. It is, how is the technology being used in workplaces, and what does it mean in terms of energy use and resource use in the communities that are hosting the real world technology that is powering all of this?
All right, Heather Boushey, former member of the White House Council of Economic Advisors in the Biden administration, thank you so much. And still ahead, President Trump is speaking right now in Wisconsin at a farmers' roundtable, speaking to some of the very economic issues we were just discussing with Heather. And we'll have a live report next on Balance of Power on Bloomberg TV and radio. The This is Balance of Power on Bloomberg TV and radio. Alongside Joe Matthew, I'm Kaylee Lyons. President Trump is currently speaking in Chippewa Falls, Wisconsin. If you're with us on Bloomberg Television, you see a live shot now. In fact, the president currently is displaying a mock-up of the reflecting pool on the National Mall next to famous skyscrapers in the United States in terms of their relative length. Not entirely sure how that is relevant to the farmers' conversation, but we know it is one of his favorite subjects of discussion. He also has talked to the farmers about things like energy costs and fertilizer challenges, especially stemming from the war in the Middle East. He says he has a plan and that some of those costs will come down when the conflict with Iran is over. So for the details now, we turn to Bloomberg's Kate Sullivan, who joins us live from the White House North Lawn. So, Kate, what else is he there in Wisconsin to say?
Yeah, so Kaylee, Trump is back in Wisconsin. It's his first time in the swing state since the 2024 campaign. And this event, as you mentioned, is all about farmers. He is at a roundtable at a corn and soybean farm in Chippewa Falls, Wisconsin. And he, it's coming at a time when farmers have been hit really hard by Trump's tariffs. And they're feeling the brunt of the high fuel costs, high fertilizer costs. We just heard the president talk about fertilizer specifically. He said that after the war is over, that these fertilizer costs will be coming down. So trying to address these concerns directly with the farmers. The president is trying to shore up a critical constituency for him because Midwest farmers were a big part of the reason that he carried the election and retook the White House. So we're seeing a sort of attempt, as you mentioned, that there have been other topics discussed there. It's not just about the farmers and the economy, but we're seeing another attempt by the White House to really try to shift the focus back to domestic priorities as opposed to the war in Iran.
The president's now showing an image of the new reflecting pool to the farmers who have gathered there in Wisconsin. As he says, it's now full of beautiful, clean water. Kate, the president is talking about taking a stake, not in John Deere today, but in leading artificial intelligence developers. This is fascinating, saying that he planned to talk about the idea as soon as next week. And you remember Bernie Sanders, of course, was floating this thought that all Americans get a stake in these AI companies through a massive tax. Is that what he's referring to, or do we know?
It's really interesting. So the president said today, he was talking to reporters, and he said that he's already spoken to AI companies about this idea. So what he's talking about, he's expressed interest and openness to the U.S. government holding equity stakes in leading AI developers. He told reporters earlier today, we're talking about it where the American people can benefit from the success of AI. He says that there could be a meeting as soon as next week with top AI executives at the White House. We're still trying to learn more details, Joe. He didn't expand a ton on this, but definitely something, as lawmakers are under increasing pressure and the White House and the administration increasing pressure to really address risks and look at how AI is going to, has already reshaped the labor market and the continuing effects there. We're waiting to see who exactly is going to be attending this meeting and what's going to come out of it.
Well, I'm all ears, Kate. Let us know what you hear. Bloomberg's Kate Sullivan reporting live from the White House North Lawn on a beautiful but hot Friday evening here in the Capitol. And joining us now for more here in our Washington bureau is Neil Bradley, the Executive Vice President of the U.S. Chamber of Commerce. Thanks for coming over to the neighborhood, Neil. It's great to see you.
Thanks for having me. Great to be back.
Start with the jobs numbers today before we get to some of the other issues here, because it was a blowout report, more than twice expectations when it comes to payrolls. And while impressive as those numbers are, we saw wage growth also matching a 5-year low. Yeah. Does the chamber have concerns about the quality of work, or are you paying more attention to the volume of jobs?
Yeah, we don't have concerns about the quality of work yet. This is 1 month's report. We are concerned about the variation, the difference between prices, inflation, and wages. We're getting to a dangerous place where when inflation is outpacing wage growth, that's really when consumers really feel the pinch of higher prices. And I think that's something we should be concerned about. I think the overall job numbers we saw reflect 3 factors that we've seen really all year. First is strength in the construction market, really related to AI. That translates down into manufacturing. This is a strong investment economy, particularly when it comes to technology and AI. The second is healthcare. Healthcare has been outperforming in job creation almost every single month. We are an aging society. 11,000 baby boomers retire a day. You'd expect to see that. And then the strong growth today in leisure and hospitality. listen, consumers tell, the University of Michigan and everyone else that they are sour on this economy. And then they go out and have dinner, and they go to the store, and we haven't seen a deterioration in their habits. And so this jobs report was consistent with the fact that while consumers are worried, they haven't pulled back on spending yet.
Well, you mentioned AI, and obviously there's a massive question as to the impact it is having on the economy overall. But we're also about to see much more AI in public markets if we're going to see IPOs of big companies like Anthropic or OpenAI. And as we just heard from Kate, the president is now talking about the U.S. having a stake in these companies. Is that pro-business, pro-capitalism for the government to get involved in that kind of way?
At the U.S. Chamber, 114 years, we have never liked to see government taking ownership stakes in businesses. That's what the private sector's for. That's why we have capital markets. The government intervenes occasionally in an emergency. This is not an emergency. And this talk, whether we hear from Senator Sanders or others, of simply taking equity positions in companies to enjoy the upside is how we begin to break down the wall between the appropriate role of government and the appropriate role of the private sector. Let's keep that wall up. Let's keep government doing its job. Let's keep the private sector doing its job.
Do you find exceptions when it comes to, for instance, the government or Pentagon taking a stake in a rare earths company? Are there times when national involvement, for instance, in a shortage or when it comes to critical minerals, makes sense to the chamber?
Yeah, so first, we've actually researched all the way back to the 1930s when the government has taken equity interest in companies.
Yeah.
First, it's always been congressionally authorized. It's always been the result of an emergency. The Great Depression, most recently COVID, what happened with the airlines. The second is the government made a decision not to exercise any ownership rights. So it wasn't a voting member. It wasn't exercising control. And perhaps the most important is from the beginning, it was always eyed towards a quick exit. So when it comes to critical minerals or other things, under the Defense Production Act, there are tools, long-term loan guarantees, long-term purchase agreements that can largely meet the needs of supporting those markets. When we begin to veer into this long-term government ownership stakes, that's when we start running risks of political interference into business decisions and markets.
Well, and how much of policy affecting business is what your new fight for free enterprise is about? You got a $100 million anonymous donation, and that's what you're putting it towards. So what's that about?
Yeah, our largest donation in the U.S. Chamber's history, because there are real threats to free enterprise. And we see it on the progressive left and the populist right, this idea that, well, price controls from the government might be an answer to people's concerns about higher prices. We know from experience that just creates shortages and distorts market signals. It creates more pain than it solves. This concept of government micromanagement of business, it pops up on the progressive left and the populist right, capping interest rate caps, for example. And then the conversation we just had about whether government has an ownership in the private sector. So occasionally those two ends of the horseshoe meet. That's of particular concern to us, and this is a moment in which I think we feel an obligation to defend free enterprise, capitalism, and the benefits of our system.
That's a fat check. We only have less than a minute left. Is this something that will go to advertising, to lobbying, to all of the above?
Yeah, it's particularly targeted to our effort to defend free enterprise. Yeah. So some of it will be about influencing public opinion. Some of it will be about educating. Some of it will be about informing lawmakers and policymakers. So stay tuned. There's going to be quite a bit of activity coming out of this.
All right. Well, we'll look forward to staying in touch with you as well. Neil Bradley, Executive Vice President of the Chamber of Commerce. Thank you so much for joining us. Coming up, lawmakers in the House of Representatives yesterday voted to advance Ukraine aid and Russia sanctions in an implicit rebuke to President Trump's foreign policy. We'll discuss the implications next on Balance of Power on Bloomberg TV and radio.
It's Balance of Power on Bloomberg TV and radio. Alongside Kaylee Lyons, I'm Joe Matthew. Thanks for spending part of your Friday evening with us. Today, Ukrainian President Zelensky proposing peace talks with Russian leader Vladimir Putin in an open letter saying, quote, Ukraine is ready for a full ceasefire for the duration of the negotiations. But Putin pushed back at prospects for European leaders to help negotiate an end to his war in Ukraine, dismissing them as mediators. It follows votes in the U.S. House of Representatives last night where lawmakers advanced Ukraine aid and Russian sanctions in an implicit rebuke of President Trump's foreign policy. Joining us now with the latest details on this, Jennifer Welch, Chief Geoeconomics Analyst at Bloomberg Economics. Jenny, it's great to have you. We've been talking, of course, about the U.S. effort on again, off again to support the war effort in Ukraine. What will this mean if this continues in terms of providing weapons and support?
A major question facing Ukraine and many other U.S. partners, by the way, is how much the U.S. defense industrial base can continue to support them, given all the munitions that have been expended in the war in Iran, and major emphasis within the United States on prioritizing refilling U.S. stockpiles, and some prioritization efforts underway that seem to be lifting, for example, Gulf partners above Ukraine and other European partners when it comes to really key systems like Patriot air defense missiles and interceptors. I think that's going to be kind of the key question in the next few weeks, especially as Ukraine takes further hits from Russia from its very advanced ballistic missiles and even some hypersonic missiles. That's putting even further pressure on these more exquisite systems.
Well, and as Ukraine takes these hits, Jenny, is that why President Volodymyr Zelensky decided now was the time to call publicly in an open letter on Vladimir Putin coming to talks? Putin obviously rejected that, but does that signal that there might be progress toward a negotiated outcome?
I think, unfortunately, and this is our assessment even before President Putin publicly said it, Moscow is unlikely to have any interest in serious negotiations at this point in time. I think Putin continues to think that time is on his side. He is certainly facing pressures at home on the economy from political corners and also in terms of the military setbacks on the battlefield. But that being said, he still seems to think that, for example, the United States is not focused on Ukraine. It's only a matter of time before he starts to make battlefield breakthroughs as Ukraine's resilience wears. And he doesn't seem interested in serious negotiations, though we have seen him engage in what I might call performative diplomacy in the past as a means of buying time. But long story short, I don't see peace on the horizon anytime soon here.
You know, we talk so much, Jenny, about munition stockpiles for the U.S., for Ukraine. What does Russia have in the bank as Vladimir Putin's financial advisors tell him that he's going broke? They can't financially support this war effort.
Yeah, the war is increasingly having a pretty dire effect on Russia's fiscal situation. But in terms of its war economy, in terms of its defense industrial base, it is essentially running on full steam ahead, especially when it comes to producing things like ballistic missiles, which are very difficult for Ukraine to shoot down. Ukraine has about a 90% interception rate when it comes to other incoming, for example, drones and cruise missiles that are easier to shoot down. But ballistic missiles, which Russia has increasingly used over the last few weeks, those are much harder to target. And that's, again, where Ukraine really needs those more exquisite air defense systems like Patriots that are now increasingly in higher global demand and in global scarcity. So I think that's the challenge that Zelensky and European leaders might be discussing later this weekend when they meet, is not only how do we play this out on the diplomatic front, but how do we make sure that Ukraine is still getting what it needs on the battlefield to maintain that leverage for when talks eventually might become possible.
All right, Jennifer Welch, Chief Geoeconomics Analyst with Bloomberg Economics. Thank you so much. And joining us now is our political panel, Bloomberg Politics contributors Rick Davis, Republican strategist and partner at Stone Court Capital, alongside Democratic analyst Jeanne Zaino, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Welcome to you both. Rick, as we mentioned there with Jenny, we saw the House this week vote to move forward on Ukraine aid and Russia sanctions, described as a rebuke of President Trump. We saw the House pass a war powers resolution on Iran, described as a rebuke of President Trump. We saw the Senate strip out ballroom funding in the reconciliation bill and force the anti-weaponization fund to come to an end, described as a rebuke of President Trump. There are more I could list. Which one is the greatest hit for the president as we consider the week that was?
Yeah, I think that within the confines of what he cares about most is probably the Iran War Powers Act. He doesn't want to see opposition to his plan, if there is one, for his execution of the war in Iran. And he feels very sensitive to that. He spends a lot of time every day talking about it. The administration struggles to shape a message, a narrative around it. And I'd say that's the one thing that probably raises the most hackles on his back, because that's a issue in motion. Ukraine, we've been around a long time. Public opinion's pretty settled on that. These other issues don't rise to the level of, the presidency really having to struggle with them. And so this is one where the polling is bad, the politics is bad, and the administration doesn't really seem to have an exit plan. Even this week, the president's saying, well, negotiations may last until September. And that's obviously roiled some folks, including potentially the market. So, yeah, I think that's the one he's got a little thin skin on.
One he managed to avoid was a rebuke of his anti-weaponization fund. When we turn to the reconciliation bill, Jeanne, they finally closed the deal. ICE is funded for the foreseeable future, knowing it already had a good amount of money, still wearing masks, still with the same warrant policy. And the anti-weaponization fund will survive despite repeated attempts to get amendments to pass. Will Democrats keep coming around on this? Does there need to be legislation that prohibits such a thing?
There definitely needs to be, because as the president said yesterday, I think the quote, Joe, was, "I love it," is what he said when he was asked about it. I don't think there's anybody who would be stunned if in a day, a week, a month, or at some point in the future, this doesn't get resurrected, despite what the acting attorney general said, because the president, as he said, just loves it. So it is going to be up to Congress to put an end to this. And I think that was one of the many things that happened yesterday that was so unfortunate, is that Republicans just chickened out. They decided that they didn't need it codified, even though they claimed that they don't support it. And so that is, I think, a problem. The other thing is $72 billion for ICE and CBP, while we have detention centers in Newark, just near where I am right now, where people are on hunger strikes. The charges are these things are being run like concentration camps. And people who are funding this are members of Congress, governors of these states, are not being allowed in to at least inspect and see what is going on in there. That is, I think, very, very concerning.
And yet the bill did pass in the early hours on the Senate floor. What was not able to pass on the Senate floor around 5 a.m. this morning was a procedural vote on FISA extension, specifically on Section 702. It tanked in part because Bill Pulte was named the acting director of national intelligence, and Democrats aren't really in the mood to extend government spy powers if they don't trust that it's going to be handled correctly. Knowing this happened, the president then tells the Wall Street Journal that he's hoping Bill Pulte in the acting capacity will reduce headcount at intelligence services and that he is unshackled because it's a temporary position. Does that help get FISA across the floor before the deadline next Friday?
No, I think the biggest hurdle to President Trump's ambitions on some of these issues, like reauthorization of FISA, is President Trump. There really wasn't anybody shooting at this target, prior to him sort of throwing caution to the wind with the appointment of Bill Pulte. If he'd have waited a week, if he'd have waited 2 weeks, I don't think this would have been a problem at all. Everybody in Congress who's part of the intelligence community, national security community, all agree that this is a critical element, especially as we get in closer and closer to the World Cups. We have a lot of people traveling to the United States. A lot of people could stir up trouble if not. And without that tool, without that capability, we're really sort of just throwing it up in the air and seeing what falls. And so, yeah, I think that there are a lot of people sort of grumpy. And I would say the same thing goes with even the anti-weaponization fund. There are always going to be vehicles that Congress can use to send a message to the President of the United States. So they may have missed this one, but there are plenty more coming down the pike.
Spoken like someone who's been there. Jeanne, what do Democrats think about this? I know you're not a fan of Bill Pulte, but are Democrats prepared to let FISA expire?
I think they are, and I'll tell you why. If we look at what Tulsi Gabbard was doing before she left office, heading down to Georgia, looking at where those investigations were going down there in Fulton County, I think a lot of Democrats are concerned that that is why Bill Pulte was nominated. As much as Donald Trump tells the Wall Street Journal it is to shrink the ranks there, 210 days, which is what the law allows for him as an acting, gets us well beyond the November election. And you now have Bill Pulte, who is willing to do the president's bidding. We've seen that. He is going to be in charge of the 18 intelligence groups in this country, and he is going to have a chance to either throw claims about fraud and other claims against the election if the Republicans lose, or to try to interfere with the election. That's what Democrats are concerned about, and it is most unfortunate, but I think they are going to be able to let FISA lapse, given what they fear is coming down the pike with this nomination.
Well, I guess we'll see come Friday. Just quickly, Rick, as we close out this Friday, it was obviously a pretty brutal one in financial markets because of a strong jobs report. The president says stocks should go up, not down, when the numbers are strong. He clearly wants this to be a good thing, a good message to send. But when you have this kind of red on my screen, I just wonder if this actually is a bad day for the White House.
Yeah, it was certainly a day of mixed messages, right? The president loves to talk about the markets, and so he'd much rather have, I'm sure, a booming market setting new records on a Friday afternoon, and he talks about those things all the time, versus trying to explain how a hot jobs market doesn't put pressure on inflation and how his hand-picked successor as the chairman of the Fed, Chairman Welch, is now under pressure to look at maybe potentially increasing interest rates. So, I mean, it's kind of a really mixed day at the White House. But you know what? They don't seem to be bothered by any of these things. They charge ahead with their messaging. They're out there talking about agriculture today. While he's talking about agriculture, hey, by the way, that reflecting pool is awesome. As if farmers care at all about a reflecting pool.
Just don't call it paint. You went down there to see it, Kaylee. He says it's a very
a rubber-like substance
of coating. Yeah. All right, so great panel. Thanks to you both. Bloomberg Politics contributors Rick Davis and Jeanne Zaino. Coming up on Balance of Power, as global unrest continues to grow here, we're going to dive into the humanitarian crises that have emerged as a result of these wars abroad. An important conversation with Carl Skau of the UN World Food Program. Coming up next, only here on Balance of Power on Bloomberg TV and radio.
Yeah, I have spoken to all of them. There's something very interesting about it, where it almost becomes a partnership with the American public. And we'll look into that. We are looking. I actually have a meeting scheduled in the very near future with, did you know that, with all of the companies. And we're talking about it, where the American people can benefit from the success of AI.
It's Balance of Power on Bloomberg TV and radio alongside Kaylee Lines. I'm Joe Matthew in Washington. That was President Trump at altitude earlier today. Air Force One expressing his interest in the U.S. government holding equity stakes in leading AI developers, saying that he planned to discuss the idea with tech executives as soon as next week. Joining us now with more on this is Bloomberg's Mike Shepard with us in our Washington bureau. Mike, I don't know if he's been hanging out with Bernie Sanders, but are we going to turn Anthropic from a supply chain risk into a nationalized company?
Well, it's funny that you invoke Bernie Sanders because he was asked specifically about a proposal from Bernie Sanders that was unveiled earlier in the week by the Vermont senator, and the president said, I had that idea before Bernie. So clearly clearly he is trying to get out ahead of all of the fear and loathing around the AI boom and the impact on the American consumer and the public. And we're seeing it in the rising utility bills. And we're also seeing in people's concerns that as all these IPOs start to unfold and happen and Silicon Valley cashes in again, that they will be left by the side of the road. And not only that, this very technology that is being introduced to the public could cost people their jobs. And as a result, you're seeing ideas like this take hold. And it's interesting to see that the president was sort of read in on it. He didn't offer too many specifics, But he clearly had an idea that he wants to meet with the executives and perhaps get something going soon. And there is precedent for his administration to try to take a more interventionist role with companies. They hold stakes in about a dozen right now, mostly in the critical mineral space, but notably Intel Corp, which they have promised to take as much as 10% of a stake in the chip maker. And so this would then be another consequence of all that. Unlike those transactions, though, Joe, we would see the companies, the AI companies, actually giving the shares to the government rather than the government paying for them. So that would be one key difference there.
Well, and I wonder how we're defining AI companies here, Mike. Would SpaceX count as an AI company if that's part of their pitch as they look to IPO
well,
next
it's
week?
a great question, Kaylee, because they really have emerged as one of the frontier labs through the XAI subsidiary that was folded into SpaceX not all that long ago, as Elon Musk started to take his rocket empire toward an IPO. And this is something that he really has laid out, Elon Musk, that is, as part of the space vision, that, look, we are going to have AI coming to you from space, and we are going to have data centers orbiting the Earth. So it very much is an AI play. And the question is, would Elon Musk be aboard with perhaps giving the government a piece of the action? He has called for something called universal high income, which would be these payments from a fund like the one that the president was alluding to and that Bernie Sanders has talked about. So it'll be interesting to see, though, what the shares would be in terms of, would it be a 10% stake? Probably not the 50% that Bernie Sanders is talking about in his bill, but perhaps somewhere in between. The reaction, though, from Trump's allies has been a little bit muted and perhaps more of a Bronx cheer. We saw David Sachs reacting earlier today to the Sanders proposal, saying that nationalization of companies in this way really puts us in a direction of where China is going. Even if we beat China in the AI race, it's not exactly a win.
All right. Bloomberg's Mike Shepard, thank you so much. And Shep, talking about whether or not Elon Musk would agree. The president says Elon Musk and he are friends again, that he's had some bad moments. He said Elon Musk is 20% bad moments, but 80% of the time he's brilliant.
20% bad moments.
That's what he said. All right. Well, as we switch gears here, this week, Cindy McCain stepped down as the executive director of the world's largest humanitarian organization, the United Nations World Food Program, to focus on her health. It comes during a tumultuous time for humanitarian efforts, with a loss in funding due to the Trump administration's widespread cuts in foreign aid and higher fuel prices stemming from the ongoing conflict in the Middle East. In a new report, the World Food Program is warning that an additional 2.5 million people in Somalia, 1.3 million in Sri Lanka, and 2.3 million in Afghanistan are struggling to meet basic food needs and in some cases are being pushed into acute hunger due to the crisis. And joining us now is Carl Skau, the program's acting executive director and chief operating officer. Acting director, we appreciate you joining us. When we consider the more acute hunger being experienced in certain areas of the world, is this due to a fertilizer problem from the Strait of Hormuz being closed? Is it simply fuel costs, or is it a multitude of things altogether?
Well, it's a mix of things. But of course, the crisis in the Middle East have hit the humanitarian sector at different levels. The first is the crisis in Lebanon, which is really the humanitarian epicenter of this crisis, with hundreds of thousands of people displaced. But then at the second layer is the cost to our operations, and that's globally across operations, whether in the Sahel in Africa or in the east of Africa or in Asia. And the third layer is really how it's now pushing more people into acute hunger. You know, the price of energy and the price of food correlates very tightly, especially in poor countries. And when families are spending all their money already on food, if the price of food goes up 20-30%, well, they eat 20 or 30% less. And so our estimate is that if a barrel of oil remains over $100 until July, some 45 million people extra will be pushed into acute hunger. And that's already on top of record high levels of acute hunger. And so what we are coming out with today is a report pointing to specific countries and how it's playing out in Somalia, in Afghanistan, and in Sri Lanka, really to draw attention to this crisis, and so that the international community steps out and supports us in responding to this crisis.
You mentioned Lebanon, Carl. Are you able to be on the ground there, or in Iran for that matter, where a whole new humanitarian crisis appears to be unfolding?
I mean, certainly in Lebanon, we 24 hours into the war, we were with the government, with authorities responding in the shelters with hot meals, but also assisting displaced who were staying with families and friends with cash. We've also had several convoys to the south, to those families who are stuck in the south. It's a struggle because the money is not coming forward like it was a couple of years ago only, but we know how to do this and we have the capacity in Lebanon. In Iran, it's different. We have been supporting the Afghani refugees in Iran, but there has not been a request to respond to the crisis there so far.
Well, and of course, the crisis in the Middle East as a whole has taken up a lot of the oxygen in terms of the global humanitarian conversation, and less attention is paid to places like Sudan, which is confirmed to be in countrywide famine. What else is needed there? What are the limits of what the World Food Program is able to do there right now?
I mean, like I said, we are already having record high hunger, 300 million people. It's a threefold increase only in 5 years since we received the Nobel Peace Prize back in 2020. In Sudan, it's the biggest hunger crisis, the biggest humanitarian crisis that we have. And like you said, the attention is not there. We are assisting some 4 to 5 million people every month, 2 million of those in the hardest to reach areas. But that's not enough. We're talking about 10, 15 million people that need humanitarian support. And in some areas, like in the Darfur, we are struggling with access challenges, but we're also struggling with enough resources, with money. We are only able to assist those in most need with some 70% of their needs. And in other parts, it's only half rations. And so we need the international community to step up to, first and foremost, end the war, to have a ceasefire, but then also to fund our operations and put pressure so that we have access to those people who are in desperate need.
How have you been able to make up for the funding shortages, Carl? Is it through private donations?
I mean, we're working actively to try to broaden our funding base, including through private donations, but it's nowhere near what's needed. You know, we have a $13 billion budget to reach over 130 million people. We're estimating that we reach about a half of that, and that meant deep cuts in places like Somalia, Afghanistan. I've just come back from Afghanistan. I was at a health clinic outside Jalalabad, where you have hundreds of women lined up with severely malnourished children on their arms, and they are being turned back because we have no commodities left. We don't have the money to provide. And you know, I don't think we have ever seen that before. In South Sudan, for example, we have pockets of IPC-5, which is famine-like conditions. We are able to reach them with airplanes, but we don't have the resources to pay for those airplanes. So, you know, it's a unique situation where the needs are high. We have starvation, and we don't have the resources to assist even those in most need.
Well, you're doing incredible work, Carl, and we'd like to stay in touch with you on it. Carl Skau is Acting Executive Director and Chief Operating Officer of the UN World Food Program. We thank you for being with us. Pretty remarkable, Kaylee, as we wait for some kind of a break in negotiations in the Middle East and we go into another weekend not knowing.
Well, and as we heard on this program yesterday when we spoke with Democratic Senator Chris Coons of Delaware, there's also potentially the humanitarian challenge that is already underway, frankly, but could become a lot larger in Cuba, as the president suggests he could turn his attention there next after Iran. There's the potential for hunger challenges there and refugees from there as well.
It's been quite a week, and we'll pick this up together on Monday. I hope you'll be with us. Until then, check out the Washington Edition newsletter. Find it on the terminal and online.
Thanks for being with us on Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons. This is Bloomberg TV and Radio.